just a few minutes ago that China and the United States have agreed to continue their tariff pauses on each other. China's top trade officials said today in Stockholm, following a two-day meeting with U.S. leaders and speaking to the press, the two sides had constructive and candid discussion and agreed to keep the tariffs at current levels, the United States taxing Chinese goods at 30% and China collecting 10% on U.S. products. So what does this mean to you? Well, they're kicking the can down the roadway. Basically, that there have been a number of trade deals that have been announced with Japan and the European Union. As a matter of fact, by the White House, by the administration, and Chinese and U.S. trade officials held their latest round of talks in the Swedish capital yesterday, trying to break that log jam over the tariffs that have skewed the pivotal commercial ties between the world's two largest economies. And, ladies and gentlemen, you think about how all of this is going to play into what you are doing out there on the roadway. Many of you have said, well, that, you're going to see maybe less freight coming in due to the tariff scenario. Now, less freight means that there's less movement of goods for you because a lot of countries have said, they're not going to be continuing on at that breakneck pace of bringing goods into the United States due to the tariff scenario. Now, the Trump administration was able to work out a deal with Japan that was announced on Monday, as a matter of fact, that indicated that the tariffs on the European Union side would stay at about 15%. The same thing with the tariffs for Japan, staying at about 15% there. So there seems to be a universal consensus as far as those numbers are concerned. But again, the latest dealing now is that China and the U.S. have agreed to continue their tariff pauses on each other. That's according to Chinese top trade leaders, speaking today in Stockholm following a two-day meeting with U.S. officials. Now, how does this all boil down to what is operating or how you operate on the road out there today? One of the best financial analysts in North America is on board to talk about this. Steve Cotton is joining me now from his office in Addison, Texas. And Steve, I want to welcome you to the show. Nice to have you on board, sir. What do you think? China and the United States deciding that they are going to be extending this out a little bit more. Nice to have you on.
Well, thank you, Mark. It's glad to be back, and we love our truckers on the road. That's the lifeblood of America. I think I think this is going to be very positive. The Europeans have levied high tariffs on our products for years and high non-tariff barriers as well. Regulatory hurdles, obstacles, concertina wire in the form of regulations and requirements. And they've gotten away with it for 40 years, and now President Trump has forced them to a more fair trading regime, and it's overdue. I think there will be more freight on the road. I think the trade will be enhanced, and I think overall, with the increased flow of goods and services, that's going to help our truckers, I think.
And from that standpoint, Steve, when you look at this, the fact that the United States was able to strike a deal with Japan, then the European Union, that happened, just a day or so ago, it seems like that we are moving in the direction of what the White House has been trying to accomplish, like you mentioned, leveling that overall playing field, right? For too long, it's kind of been the other way around. We've kind of been at the mercy of those foreign governments with what we're paying, et cetera. So you see this as maybe continuing on. We're going to continue on with this trend. Mission not accomplished yet, but we're moving in that direction already.
This is not your father's standard tariff agreement. This used to be tariff agreements were negotiated over tea and crumpets in a closed door meeting. Trump has done something that previous presidents have not done. He has tied it more directly to our foreign policy and national security and even our energy security objectives. That's new. With the Japanese agreement and now with the EU agreement, he has coupled a lowering of tariffs and lowering of non-tariff barriers with basically an economic development fund for use by the United States to address, pharmaceuticals, infrastructure, energy, uh, military, security, defense spending, all of that. And that's new. And that's a new and a creative element that Trump has brought to the table that no previous president has really addressed.
Yeah, and Mr. Trump went on the Truth Social media site that he's got reporting. He went on to say, quoting the fake news, reporting that I am seeking a summit with President Xi of China. This is not correct. I'm not seeking anything. I may go to China, but it would only be at the invitation of the president of China, which has been extended. Otherwise, no interest. Thank you for your support. Those words from President Trump. Would going to China make any difference at all? Or is the United States here in a position of power right now that we can dictate the terms of these agreements? No back and forth, in other words. What do you say?
Well, I think, Trump plays three-dimensional chess all the time. And look at the Chinese situation from their standpoint. They've got something like 24% youth unemployment. That's huge, and that's very scary to the Chinese Communist Party. Revolutions come out of unemployed students and youth, and they know that better than anybody. They have got a major exodus of companies from China going to India, Indonesia, Vietnam, etc., coming back to the United States. They've got big problems. They've got entire cities that are vacant. They've got a real estate industry and a banking industry that is very fragile. They've got major economic problems. So President Xi needs an economic arrangement with the United States. And right now they need us more than we need them. But China is one of the second largest economy. And so it's in both countries' interest to negotiate a better deal. But Xi's under a lot of pressure right now. So I'd say that President Trump is in a stronger position. I think you're right.
Okay, and from that standpoint, what about our neighbors to the south regarding trade relations with the United States and Mexico? This kind of set the stage, and be our guide on this. United States considering imposing a 30% tariff on Mexican imports, potentially starting on Friday, August the 1st. And what would this do? Would this create a real issue with cross-border trade? This potential increase follows earlier implemented 25% tariffs in March of 2025 from the goods covered under the USMCA agreement to some extent. Any thoughts on that as far as what we're seeing here in North America with those numbers?
Well, I think you have to look at each of these trade agreements within the broader context of what are the political or national security issues that Trump is trying to address directly or indirectly. He is trying to put a lot of pressure on Mexico to get serious about fighting the cartels and getting our help in doing so. Now, politically, that's a very, very sensitive issue in Mexico. The cartels have infiltrated at the highest levels of the Mexican government, Mexican police, the Mexican army. They are a quasi-state themselves. And the last president of Mexico that really took on the cartels unleashed a lot of bloodbath, a lot of bloodshed internally in Mexico, and subsequent presidents backed off that in order to cut a peace deal with the cartels. Now, I think the cartels are a terrorist organization. It's not one cartel, it's multiple, but they are terrorist organizations. They operate like businesses. They operate like terrorist cells. And I think it would be in the Mexican government's interest to partner with us and get serious about taking their government back.
Yeah.
And I think that backdrop to these trade negotiations.
Yeah, Steve, let's do the break. I do the commercial thing. And when we come back on the other side, let's pick it up and do some more of a deep dive into the headlines. And one of the stories coming out today, early this morning, that Union Pacific has decided to buy Norfolk Southern, $85 billion on that. And that is going to be consolidating a number of things on the rail sector. What does that mean for the economy? What does this mean for manufacturing? What does this mean for the shipping side of the aisle? Join us. Let me get you in. That's why I'm here, ladies and gentlemen, to bring you the latest news, weather, traffic, and we do it with the great help of great guests like Steve Cotton. We're going to be back in a minute. I'm Mark Willis, live across North America, Sirius XM 146. Finances, numbers. Steve Cotton is on, one of the best financial analysts and advisors in North America. Steve, again, thank you for joining me on the program. Where can folks find you, good sir, on the web? Where can they reach you? Phone number and all that.
Well, thank you, Mark. My office is here in Addison, which is North Dallas, but I have a website, cottonwma.com. Cotton is COTTOM, WMA.com, and we're a very family-centric wealth management and financial planning practice, and our clients become like family to us, and we guard them fiercely.
I appreciate it, sir, and very, very glad to have you on board to talk about all of this. And, when you look at the technology that's coming to the table to help shape financial portfolios and things like that, in this day and age of uncertainty in the marketplace, folks with 401ks, they're hearing these stories about trade agreements, no trade agreements, tariffs 30%, 50%. How does one position themselves for the long run, individual investors? How do you do that? What do you tell folks when you get started?
When we work with a client or a family or church or a foundation, we adhere to some very basic principles. We always match the strategies with the risk comfort level of the client. And, people get in trouble when they start investing on the basis of rumors or, my uncle down the block bought this and it did well for him. And, everybody ought to buy an annuity and everybody ought to do this. We avoid those one size fits all type of solutions. And in going on 21 years in the market and in financial services, I have never blown up a client in the stock market. And that's because we adhere to some very important fundamentals, such as diversification and matching the strategy to the client's risk profile and their financial goals.
And when you're advising someone about what their future plans are, where do they go, what should they do, that kind of a scenario, do you find that hesitancy is going to be one of the big problems to even make a move? That some might say to you, Steve, well, I love this stock, or I love this 401k, I love this mutual fund. Folks don't, I guess maybe they don't like savings bonds anymore. I know they're still around. My mom and dad had them for years. But are those even still a thing? But do you find hesitancy can really be a financial deal killer? What do you think?
Well, I think you have to understand, if you're going to look for a good financial advisor, and I always urge people to partner with a good one, you want somebody that's not a product pusher, that doesn't have a hidden sales agenda. You want somebody that is a problem solver and a teacher by nature, and who partners with you to help you make good decisions. And we work with people on estate planning and financial planning and college planning for their kids. We advise them on long-term care solutions for themselves or their parents. We do it all. We partner with very good attorneys, very good CPAs and accountants. And, we form a team of experts for our clients and try to position them to make good decisions.
Yeah.
I did know a guy one time that didn't know what to do with his investments. He literally sat in cash for 2 years and missed the last major bull run.
Wow. So
that's unusual, but that does happen. And if you partner with somebody that's trustworthy and that's a problem solver and approaches it with some fundamentals in place and who is ethical, you will do well.
Yeah, and when you put that in perspective as far as what's going on in the national circuit, that you mentioned trust being an important thing, but President Trump doesn't want Jerome Powell in there as the chairman of the Federal Reserve. And let's talk about that. Once there is a change in the role of the president and chairman of the Federal Reserve, what is that going to do for the trust in the marketplace? I think Mr. Powell has got until May of next year, and then he just simply naturally cycles out of that process. Do you think the president will make a move prior to that, or being so close to May of next year, he might say, well, we're just going to let it ride out? How important is
Well, as I noted, Trump plays three-level chess all the time, and he is trying to pressure Powell to lower interest rates because inflation is way down. It ticked up 0.3% from May to June, which was insignificant, in my opinion. But he's trying to gently, well, maybe not so gently, pressure Powell into bringing rates down, and he's right to do so. But on the other hand, Powell is saying, look, we haven't seen the results of all the tariff negotiations yet because not all the deals have been concluded. We don't know whether it's going to be inflationary or not. And we've got to be prudent in the pace at which we lower interest rates, which is stimulative. And he's right also. They're right for different reasons, but they both have different objectives. Powell's objective is low inflation with full unemployment or full employment. Trump's agenda is grow, baby, grow, and you only do that through lowering interest rates to spur business and to make borrowing cheaper. And they're both right with objectives, but I don't think the markets, the investment community wants to see Powell bullied or forced out. I don't believe Trump intends to force him out, but he's just trying to make him a little more uncomfortable.
Yeah, you could see that with the expression on both gentlemen's faces when they held an informal media chat when Mr. Trump was visiting the Federal Reserve Board. When you mentioned the fact that the keeper of the kingdom, if you will, of the financial kingdom at this point is the Federal Reserve Board. So we are expecting maybe the Fed to kind of keep interest rates where they are for the time being. Is that going to be a non-event? In other words, if rates stay the same, how do you think the market's going to react to that? And how would that affect maybe borrowing from your standpoint?
I think the market is factoring in probably the Fed staying where it is one more time at the next Federal Open Market Committee meeting. The betting in the industry is that the Fed may lower one time more before the end of the year, but it may wait until November or December to do so. I think the Fed has typically always been late to the party. They're late to raise rates. They're late to lower rates. And unfortunately, Powell has come to be seen as being a little political because he didn't raise rates during most of the Biden administration years when inflation was taken off. He came late to that party, and now that inflation is back down, he's late to lower rates commensurate with where they ought to be. Other countries have been lowering rates 5 and 6 and 10 times.
Yeah.
But I think what the markets don't want to see is a politicization of the Fed, like we saw the politicization of the FBI and the CIA,
right,
and these federal agencies, DOJ. Because when these agencies are politicized and turned into weapons, bad things happen. And I think the investment community wants to see an independent Fed, wants to see someone that has the country's back when it comes to moderating inflation.
Yeah.
But you can't fault the president for wanting the Fed to lower rates because that has a huge impact on how much we're paying to service our federal debt.
Yeah, and that debt keeps going up and away. Correct in that, do you foresee the numbers that we as consumers are going to be paying over the long term getting any smaller over time? Or is the debt something that our great-grandchildren are going to be saddled with as we move ahead?
A $36 trillion debt, Mark, is absolutely unsustainable. And Trump knows this. What Trump is doing, the approach that he's taking philosophically and pragmatically is grow, baby, grow. He wants to grow the economy. He wants the Fed to be a partner in moderating interest rates and continuing to wind them down, make borrowing cheaper for people, for businesses, for consumers, for truckers, for everybody. And he's right on that path. The only way to to deal with the national debt is to both grow the economy and to cut government spending. But no one in either party has addressed the entitlement problem, which is really serious and getting worse. Medicare is on a path to bankruptcy. Social Security is on a path to bankruptcy. And that's coming up in the early 2032 or thereabouts.
My golly, what a story, right, Steve? I mean, that's why we got to keep getting you back on to peel back that proverbial onion, get right to the heart of the story, and separate the waters out for us, fact versus fiction. On board, ladies and gentlemen, one of the best financial analyst advisors in North America, Steve Cotton on the line with us. And Steve, we're going to wrap up the segment. Where can folks find you again, good sir, on the web? Where can I go?
My office is in North Dallas in Addison, but my website is cottonwma.com, cottonwma.com, and doesn't cost anybody a dime to come in for a consultation. We do a lot of listening, and we don't use a one-size-fits-all approach. We tailor an individual's investment strategies and financial plans to exactly what they and their family need and nothing more.
All right, I appreciate it. We'll do it again, and I'll reach out. That is financial analyst Steve Cotton on the line with us.